Hello and welcome to another episode of Idea Me. Cryptocurrencies are much in the news, but remain a mysterious subject for many people. So what are they? How do they work? And why should we care about them? To help answer these questions and more, I'm joined now by David Roach, founder of Independent Strategy and Quantum Economics. David, the phrase cryptocurrencies is quite familiar now. Well, what exactly are they? And what is meant by the word crypto?
Okay, well, the crypto bit means they're encrypted, which actually means that they work through something like a blockchain technology, which I will explain. So I'm not trying to kind of confuse people with more jargon. What they are a form of currency which fall outside the control of a central bank or a government. And they represent an alternative way of investing or using money to transact or measuring value. That's the theory. So they actually are meant to do everything that what is called a fiat currency, which is the traditional sort of currency you get from your corner bank. They're meant to do everything that it does, but without having government in the cockpit. That's it in a nutshell. Now, blockchain, let me explain that for a minute. That is actually a succession of transactions. So you sell me your cat. I buy some cat food, and then I take the cat to the vet, and then I sell the cat to another person. So we have 4 transactions going on in there now. What a blockchain transaction is, it links one transaction to the other transaction to the other transaction. So think of your model train set. And these are linked using encryption. So you have these 4 wagons and let's say a locomotive chugging along, linked. They can only be unlinked or changed or taken off the rails or put on another siding or another rails if everybody in that chain agrees. That's a blockchain transaction.
How do you access the blockchain? Is this publicly available?
Yeah, you can get blockchain technology off the net. I mean, it's not only used for cryptocurrencies, it's used for everything. For example, it's used in shipping goods around the world. It's used in insurance policies. It's starting to be used by banks in order to run their back offices and things like that. So the blockchain technology is all about making sure that a succession of transactions are secure because they are encrypted and form a chain, and they cannot be altered in any way. Therefore, they're proof against fraudulent activity, provided the codes are properly linked and solved, they're secure.
So could a kind of bystander access some of this material? I mean, could a member of the public say, I want to watch a blockchain transaction conducted by third parties? Could they just log in somehow?
Yeah, no. Otherwise, you're going to have a lot of people watching the transaction who will be wondering how to undo the transaction or steal this bit or that bit. So no, but you can look on YouTube ad infinitum and see all sorts of ways and illustrations of how transactions actually work. But essentially, they are just a succession of transactions which are encoded and which are linked to each other and are secure because they are linked to each other and approved by a chain of people involved in those transactions. And that chain cannot be broken, altered, or downloaded by anybody else unless the whole chain of people involved actually agree to do so. And that's their security rests on that particular characteristic.
Blockchain technology underpins crypto or digital currencies. The most famous example is Bitcoin, but there are lots of others, aren't there?
There are hundreds. There are different sorts of cryptocurrencies. There are ones which are linked to an underlying currency or asset value. They're called stable coins, and we can go on and on. But there's no shortage of cryptocurrencies to invest in.
Do you know anything about how they began?
Well, they began by a single person whom we still are not entirely sure of his identity, created a blockchain for the first time. And then a blockchain was used by Bitcoin in order to create a currency which is limited in terms of its supply. There are only so many bitcoins that can be actually so-called produced or mined, as it is called, and then setting this up to work in a blockchain, which a huge amount of people called miners, but they're actually owners of computers who actually solve these the cryptography problem or the characteristics of each transaction and get paid for doing so in Bitcoin, by the way. They get paid in Bitcoin. And the controversial side of Bitcoin is, of course, that it uses a huge amounts of power, which may be made, usually is made by fossil fuels in order to make the process work. In other words, the mining process, that of actually setting up the blockchain and solving the various stages of cryptography in the blockchain, they are extremely energy intensive and therefore much frowned upon and actually banned in China.
Are all digital currencies affected by this problem, this energy problem?
Less so. When you go to to currencies like Ethereum, which is the second biggest to Bitcoin, then they're based upon a concept of shared value, which is complicated to explain, but it really means that the people who are involved in the chain are invested in the chain, and the way in which the security is provided in the chain is by their investment in the chain, so that if they were to become in any way fraudulent, they would lose their own money. So you have a system which is more based on trust than on pure cryptography, though it involves that too, but it uses a lot less energy.
Bitcoin and Ethereum and lots of these other digital currencies we've been talking about are products of the private sector, but now the public sector is starting to get involved, isn't it?
In a big way, for several reasons. One is because, of course, the public sector, in particular central banks, but also governments, are mindful of our well-being, and therefore they think that cryptocurrencies may make the whole financial system and economy unstable. The second factor is that, of course, cryptocurrency takes away from their power. If you're not in charge of the national currency, but there's an international currency which replaces it, then you no longer have the tools of monetary policy, you no longer have the tools of control over your citizenship and what they do with their assets that you did under the good old system of fiat currencies, where if you didn't like, for instance, people taking money out of the country, you could simply put on exchange controls. You can't do that with cryptocurrency. So there are two factors. One is altruistic. They're intensely worried about our well-being. And the other is that they're intensely worried about them losing power, themselves losing power.
You mentioned this phrase fiat currency, which one starts to read about these days because of its as a way of describing the sort of traditional currency that we're all used to. So what's the difference between a crypto or digital currency and a fiat currency?
Well, a cryptocurrency is created by supply and demand within the context of encrypted assets, which does not touch the sides of state institutions. It's actually secure or insecure based upon transactions between private individuals. Now, that may include your best loved investor of your pension fund. I'm not saying that these are all teenagers wandering around the streets staring at their mobile screens, but what I am saying is that this is not a phenomenon in which the state is involved. If you come to fiat currency, then it is entirely the state which is in the cockpit. Let me explain why it's flying this particular plane. A central bank issues currency in one form or another. It can be actually a real currency that you could put in your pocket, or it can be simply a credit to a commercial bank. That commercial bank can lend that currency on. Let us assume for 1 single second that the commercial bank wanted to lend all of the currency, that fiat currency that it got from the central bank. Then it would reserve a portion of that currency in order to safeguard against future losses. Let's say it kept 5%, then it would lend the other 95%. If the whole banking system worked by reserving 5%, keeping 5%, but lending on everything else, then the original amount of money given by the central bank to the system would expand by 20 times. That's how the arithmetic works with fiat currency. And it is entirely within the banking system. And of course, you can obtain it in either real cash form or as a credit to your account by transacting with your banking system. But you can see that the chain of control runs from the government licensing the central bank having a monopoly of printing money. That money is transferred to the banking system, and the banking system causes it to expand by lending, called a fractional reserve system, because it keeps a fraction of it in reserves and the rest it lends, and that is how your money is created. When you have a cryptocurrency, you don't even touch the size of that. You have a cryptocurrency because you have transacted with the issuer of the cryptocurrency, who is a private sector, to give you credit of so many bitcoins or Ethereum or whatever. That's the difference.
Are any of these currencies today, either fiat currencies or cryptocurrencies, backed by anything in the real world, any assets out there? I mean, I'm thinking back to the gold standard, which used
Bretton
to
Woods.
operate, in the 20th century.
The quick answer to that is no. What backs a fiat currency is the full faith and credibility of the government and the central bank, which basically means they promise to print more. They have an undertaking that they will preserve the value of the currency, but that really, history shows, is not always a consistent virtue. So the answer is really no. If you go into the Bank of England with your pound note and ask for its equivalent in gold, you will be probably locked up, but you certainly won't get your equivalent in gold. There was a time when you would. That was when currencies were actually issued against an asset. Now it is issued only against the faith of the government. So essentially, what gives the credibility to a fiat currency? And the answer is, what gives the credibility is that you believe in it. It's a circular argument. If you didn't believe in it, then the currency would have no value. And if you go to Venezuela, you'll find out what that means. So that is actually how it works. And the argument for cryptocurrency is that actually, if you look at fiat currency, the credibility is based on a network. That you accept it from me, somebody else accepts it from somebody else, and the whole system works because people believe in it. Okay. Once a cryptocurrency achieves a similar network, why will it not be similarly credible? That is why I think that without being, a rabid supporter of this or that, or being highly invested myself in this stuff, which I'm not, why I think that cryptocurrency can rival fiat currency because it can achieve the networking effect, which is now also the basis of fiat currency, because fiat currency cannot be changed into any real asset.
Okay, this is a good point at which we can just remind ourselves of what we use currencies, either digital or fiat, for.
There are three purposes to fiat currency or cryptocurrency. The first is to measure value. You use your currency to measure the value of what you're buying or investing in. The second is to transact. That I give you the currency and you give me the cat. In the case that I'm buying your cat, God forbid, but okay. And the third is to invest. Let us say that I wish to invest money in something that will go up. I don't want your cat. I want to own something which will help me to retire before I drop dead, which is becoming increasingly difficult if you rely on state pension funds. So it's a vehicle of investment. So it does the three things: measures value, it transacts, and it is an investment asset.
Okay, so we've managed so far throughout history without digital currencies. Why would anybody want one now?
Because they don't trust the existing fiat currencies. They see what is going on between central banks and governments. Governments spending money they don't have, and central banks providing governments with the money to do so. They see instinctively that this is a debasement of fiat currencies. They also see the rise of government control. And not only is it the CCTV cameras everywhere, if the government controls the currency, then the government can control how you spend it. And it also can keep increasingly tabs on you through how you behave. So, and that second issue is that people want to get out of the way of governments. And that was a function which was given to the individual by having the anonymity of cash. If you went around the place with 500 euro notes in your pocket, you could basically do what you liked. There was no way the government could trace what you did. But now there are no more 500 euro notes. Now, why is that? And the answer is because the growth in demand for traditional cash, anonymity, has been rising outside of the countries which issue it. So you actually have to go to the Russian mafia to find out why they all love euros. Now, what digital currency actually does is it increases the anonymity of cash. Because people in all sorts of activities, they might be legitimate, they might be antisocial, or they might be plain downright criminal or fraudulent. They can actually achieve anonymity using digital cash. That's one reason, but it's not the only reason. The perfectly legitimate reason is that people do not trust fiat currency anymore. And above all, they do not trust the people in charge of the fiat currency, be they central bankers or ultimately governments.
So, trust is the central theme, whether it's a fiat currency or a digital currency.
Yes, it's a network of credibility. It only has value because you believe it has value. And the guy next to you believes it has value, so you can transact with him or pass it on to him. That's the only value, really, which is embedded or underlying or underpinning, is perhaps the best word, both fiat currencies and cryptocurrencies. There really is no difference, except the cryptocurrencies network is a lot smaller, and therefore it is a lot more volatile and immature.
What is the scale of digital currency at the moment? How does it compare?
Oh, it's fractional. It's around $3 trillion, which is a lot of money if I lay it out in your front garden. But in terms of the global economy, it's still very small, very small. And within that, you can then carve that up into all sorts of different types of digital currency, because there are many different types, not just brand names, but there are digital currencies, as I mentioned earlier, stable coins and so on, which are different in nature, and they're only about 10% of the totality of cryptocurrencies. So this is very much a young, inchoate type of phenomena. It's not anywhere near maturity yet, and I think if you imagine maturity, then you have to say, well, if it goes in that direction and gets to that sort of spread, then it will have the network, which will give it the credibility of a fiat currency. Otherwise, I don't see the logic.
How fast is it growing?
It's probably increasing about 20 times every 2 years.
So that's quite fast?
Oh, yes, that's quite fast.
And the authorities, the traditional central bank authorities, are worried about it?
Oh, very well. First of all, you've seen an absolute war. You've had every worthy central banker in the world and government minister in the world dumping their load on cryptocurrencies. Now, that's what actually caused Bitcoin earlier this year to almost halve in value, because they expressed, which is perfectly legitimate, that these things are very volatile, that there are a lot of people involved in them who don't know what they're doing. And they're clueless. And they're taking risks which they're not going to get bailed out of. And they said that the volatility of the currency could destabilize the entire economic system and financial system of countries. And that there were also, of course, quite a lot of nasty people involved in this who probably belong behind bars, all of which are true. But there is one other truth, and that is that these currencies rival those established incumbent politicians and central bankers' power because it replaces it. And that is what they're really worried about. And of course, you can see that they're not actually against the idea of a cryptocurrency, because what have they done as a principal reaction? They have created, or are creating, or are studying creating a central bank digital currency, which is, in a world full of acronyms, it's called a CBDC.
How do they work?
Oh, well, now they can work two ways. But the big thing is the state is in the cockpit. So they issue the cryptocurrency, which is held in an e-wallet, which is basically like having a portfolio of e-assets, by a bank, a commercial bank. That's one way of doing it. Then the commercial bank will lend or give or provide access to the e-currency for its clients, be they corporations or individuals. So you have a two-step process. Then there's another alternative, which is a one-step process. Now what that does is that everybody, you, me, and possibly even your cat, has its own account at the central bank. So that you bypass the commercial banking system, and the central bank actually puts money into your account, and your e-wallet is fed and of course borrows and gives back money, e-currency, that is digital currency, directly to the central bank. So you have two parallel systems.
Does this offer any advantages to central banks and governments?
Well, the obvious one is if they don't do it, they won't be issuing currency to as many people or have the same control over monetary supply as before, because digital currency is not going to go away, and the growth rates we've mentioned is going to continue to eat into their traditional role as monetary policy makers and controllers. So the answer is they can't do nothing. They've got to do something, so this is what they're going to do. But the other thing, which is down the road, and which is actually feeding cryptocurrency, the private sector version of what the central bankers and governments are trying to do, is this. If the central bank can track what's in your e-wallet, they can also track you. Whereas if you own a private sector digital asset, they can't. So let's take a country which we will not name, because of course nobody is quite as nasty as that, which has a central bank, which issues digital currency, central bank digital currency, CBDC, to its commercial banks or directly to its citizens. This gives it two things. One is it can find out, either through its commercial banks if it controls them, which in the country we're talking about, which is of course non-existent, it does. It can find out exactly what these people are spending their money on, or where they're going, or what they're doing with their time. Did they make a contribution to any sort of nasty political organization, etc.? But the other thing is they can control you. And the reason they can control you is because, let us say, I am the chief honcho of one of these nasty economies. And I find that the economy has an output gap, which basically means it's not producing enough stuff to make the people happy and therefore to keep me in power. That's called an output gap. Then what do I do about this? And the answer is I give my central bank digital currency to you, and you have to spend it on the goods and services that I want you to spend it on by such and such a date, or the value of that digital currency in your account will fall to zero. Now, the way to really run this is to make sure that your son-in-law owns the factory which makes the things like spaghetti, for example, that I want you to consume more of. I want you to eat spaghetti 6 times a day. So I'm going to give you money to buy spaghetti, and if you don't buy the spaghetti, you're going to not have the money anymore because it'll fall to zero. And if you do spend the money, then my son-in-law will get richer. And if I ever become not the honcho of this nasty state, then the son-in-law will support my lifestyle in a Caribbean island.
So, are there any other advantages for governments and central banks from their kind of digital currency?
Well, it would ensure stability of the financial system. And that is something which individuals may like. In other words, you won't wake up one day and find that the value of your bitcoins with which you want to buy your breakfast has suddenly fallen by 30%. So the cost of your breakfast has gone up 30%, because a central bank digital currency is actually a national currency. It's just in an e-currency format, but it is pegged one-to-one against the national currency. So, for example, an eCNY, which is the digital currency in China, is effectively a CNY. It is a renminbi. It is a one-to-one relationship. It is not going to change. And the central bank of the government sits behind this. So this not only creates stability in the financial system, it can't be damaged by the volatility of cryptocurrencies, but it also has an advantage for people in that they can be sure that the value of their digital currency will be the same tomorrow in local currency terms as it was yesterday.
Is the difference, though, between a traditional fiat currency issued by a central bank and a central bank digital currency just really a question of semantics or theology?
No, I think the ability and convenience of a central bank digital currency is much greater than a fiat currency, because you, being, at least hypothetically in the UK, are used to a sophisticated society in which everybody nearly has a bank account. But don't forget that most of the world's population does not have a bank account. Now, the advantage of a digital currency is you can store it in your phone. It'll be stored in a digital account, so it's not going to disappear if you lose your phone. But the reality is that it brings people into the banking system, gives them the flexibility, and allows for transactions in ways which a fiat currency really does not.
Also, because presumably you've got this intermediary that's necessary for operating a fiat currency electronically, in the sense that you've got to have an account with a commercial bank, haven't you, today, on the whole, to transact electronically?
Well, yes, but it will become no, because
Right.
as the network grows, let's assume for a minute that you live only in a world with only fiat currency, but it is today's world. How many times have you actually had to reach into your pocket to get cash to pay for anything? 90% of the time you don't. You never touch the money. Cryptocurrency, if it does become a medium of transaction, will eventually get to that state. Now, it's not there at the moment. There are things I can buy and transact for in cryptocurrency on my phone. In fact, I actually paid a lawyer acting for me on a real estate sale in Ireland with cryptocurrency phone to phone the other day, because every time I sent a bank transfer, the Irish banks lost it. So the answer is today, yes, it's hard to go around the place paying for everything in cryptocurrency. But what you're actually asking me is there a future on the horizon when you will be able to use cryptocurrency without having to run to a bank and change your Bitcoin or your Ethereum into a national currency? And the answer is yes, there is. That really depends on the acceptance of two parties to whatever transaction you're talking about accepting a cryptocurrency. And I think that will come. But it has to come as a result or be the cause of greater stability in the value of cryptocurrencies. Otherwise, they are not great transactional tools, and they're also still very slow. At least Bitcoin is very slow. Ethereum is not that slow, actually.
You mentioned stability, and there's another new development, stable coins. What are they? How do they work?
Well, stable coins are actually cryptocurrencies, but they are fixed against another asset. Let me explain how that works. Most stable coins are in the US, and most of them are fixed against the US dollar. Now, what that means is you want to have a stable coin. So you want to make sure that you have a crypto asset, a cryptocurrency, but you don't want the valuation to go up and down like a yo-yo, like Bitcoin does or other currencies do. So you invest in a stable coin. So you go to a stablecoin issuing company and you say, I want 10 of your stablecoins. And you give them, let's say, for simplicity, $10. They have to keep that $10 in a US currency asset. Normally that will be cash, or it will be a money fund, or some form of US currency short-term asset, an asset in which you can get your dollars back quickly. Some hold bonds. Now, there are a few which actually hold another form of cryptocurrency, like Bitcoin. And I wouldn't describe that as being a stable coin, but it is rated as a stable coin. So essentially, what happens is you get a cryptocurrency, you hand over US dollars to the company issuing you with the cryptocurrency. That company has to invest those $10 in a short-term US money asset, which ensures that your currency in crypto is backed by a US dollar asset, which means that if you want to get your money back, you can go and cash it in for a US dollar, theoretically. There are a lot of problems with this concept. Of course, because it has been discovered that a few of these companies actually didn't have the assets after all, and so on, and so on, and so on. Again, we're dealing with very immature types of currency. We're a long way from leaving the Wild West.
So, what are the pros and cons of these different offerings in the market?
Well, the pros for a central bank cryptocurrency are that it gives you stability. You're basically owning the national currency, whatever that central bank is responsible for, and it won't vary in value. So that's the pro. The negatives are that if these powers to issue cryptocurrency do not get you out of the way of the risk that central banks will debase the national currency anyway. So they can debase it through issuing too much of it, or the government spending too much money and borrowing too much of it from the central bank, and I can go on. So that's the plus and the minus of a central bank digital currency. The plus and the minus of a private sector digital currency is one, transactability. Can you really go around the place like you do with your UK bank deposit and actually spend and use this money without ever actually seeing it in a cash form, coin or banknotes? And the answer is it's still very difficult. It's slow, and the fact that the value of cryptocurrency is highly volatile, I mean, the price you paid for something yesterday is not necessarily the price you're going to pay tomorrow. So that's a big disadvantage. The advantage is the flip side of everything I've said about central banks. You get out of the way of government, and you get into a currency which is determined purely on the basis of transactions and, as we started in the beginning, blockchains of transactions between people who agree to do so. And that currency is then out of a national power. And people like it for that reason. Now, they can like it for good reasons. In other words, there can be sound reasons for them to be like that, or they can be criminals. They can go from one extreme to the other. But that's why they do it. Now, there is another factor which we have not dealt with, and that if you're an overseas worker and you want to transfer money from, let's say, Hong Kong, you're an overseas worker and you want to send it to the Philippines. Well, if you go to the traditional means of doing this, bank transfers or Western Union, they frankly will rip your guts out. They'll charge you something like 4 or 6% to make these transfers. With a cryptocurrency, you can do it for nothing. You basically do it at market exchange rates for that particular cryptocurrency. And if your people at the other end of this transaction can pick up that currency, then they can either take it to a Philippines bank or whatever, they can spend it, though the transactability is low. So from the point of view of foreign workers and foreign transfers, that's a big advantage. There is also another advantage. If you happen to be a happy inhabitant of Venezuela, then would you prefer to have bolivars or have cryptocurrency? Well, it's pretty obvious. So effectively what you do is when the national authorities or the national dictatorships have completely destroyed the economy and destroyed the currency, if you own crypto, to the extent that asset is not going through the floor or something like that, you probably will end up a lot better off. So the lack of trust in shall we call it tin pot states is another way in which cryptocurrency can actually serve a useful social purpose.
Why should we care about this development? How big an impact is it having on the global economy, on global politics at the moment, and how much impact do you think it'll have in the future?
Well, there are a lot of chapters in that particular book. I don't, for instance, think that creating a digital euro or a digital yuan, renminbi, Chinese currency, will actually replace the US dollar, just because the Fed is being quite slow in developing a central bank digital currency, certainly compared to a lot of other central banks. But over 78 or 80 central banks worldwide are studying the possibility of introducing their own digital currencies. I don't think that changes the status of the dollar as an international reserve, because essentially a central bank digital currency is the national currency. And if people don't want to hold it now, why would they want to hold it then? It makes no difference. However, if you are a powerful state like China, you can make sure that the Thai tourist industry accepts your EY digital currency, because you've got the power. It's the same for Belt and Road initiatives. You can lend the money in digital yuan and make sure that the people building the railways in parts of Africa will repay the loans in digital yuan. You have no US dollar exposure there. So you can force through a certain increase in your global power as a reserve currency because of your political power. And that might raise the share of the yuan in international transactions and reserves and financial flows from 2 to 8%. But it's not going to take the dollar down from 60% to 6%. That's just not how it's going to happen, because to do that, both sides of the transaction have to agree, we don't want to have the dollar anymore. And people have been saying that since Valéry Giscard d'Estaing described the US dollar as le privilège exorbitant, the exorbitant privilege. And it still is.
So the geopolitical impact of digital currencies is possibly muted, or at least for the foreseeable future. What about other effects? For consumers, it's a risky thing for consumers, isn't it?
It is. It's a risky thing, particularly for naive investors. People ring me up who are kind of not traditional investment managers or investment people, and they say, gosh, look at Bitcoin, it's $65,000. Should I get in now? And the answer is no, not because I'm making a judgment about whether it's going to be $55,000 or $165,000 in a week. Without that judgment, it's because you don't know what you're doing. And that is a point has been made by financial regulators and the central banks, and it is correct. There are an awful lot of people involved in putting money in this, and I think consumption is the least of the risks for the individual. It's the investors who are putting their ability to survive in old age or maybe tomorrow morning at risk by going into assets they do not understand, which are not regulated at present, and for which you have no fail-safe, no backup from the government. I mean, if your favorite bank on UK High Street goes belly up, you can be quite sure that no matter how thick your government is, and by recent standards it can be pretty thick, they are not going to let depositors lose. So I think that is what you forego by going into a crypto asset as an individual. And that is the side of it which I think will take quite a while, the growth in the network, the growth in the credibility, to actually overcome.
Finally, are there any real advantages, any lasting advantages from this development? I mean, do you think it might, in the end, be a way of influencing governments and central banks to behave more responsibly?
I don't think the growth of digital currency will stop central banks and governments behaving in accordance with how the architecture of the global economy has changed since the pandemic. And I think the pandemic is now on course to become a permademic. Not something that topples the world, but it never goes away. So it is rather like driving a car with your foot on the brake. It may not bring the car to a halt, but it will create a nasty burning smell and limit your speed. That, I think, is where we're going on the pandemic. Okay, now, what does that mean? It means we're stuck with big governments, big debts, the need to pay social transfers in order that people who are less fortunate than others can have a decent life. And the only way to actually keep that going is to keep the cost of capital, the cost of debt, below the rate of inflation. In other words, you stop credit markets and you stop central banks from repricing the cost of capital, because otherwise the size of government, the size of its debts are unsustainable. Right. Do I think that cryptocurrency can actually bring this to a screeching halt? I don't think so. I think other factors can bring it to, it can collapse as a system. It can move towards a Sovietization of the system where we don't really have any growth, where the state pretends to pay and we pretend to work, sort of scenario with lots and lots of money printing, but a kind of gray world, which is low risk, but which actually is very low efficiency, low productivity, low growth. Okay, you can go that way. Now, those things can lead to other things like the transfer of power from the state to people on the street and from democracy to some form of rather nasty dictatorship and so on. But I don't think it is cryptocurrency is the key mover. I think it is the architecture of the economy which we have inherited from COVID. I think that's important. If we wanted to look at what a cryptocurrency does and does not do for us, okay, to be fair, it gives people a greater degree of freedom to either act like idiots or to get out of the way of the state, which is encroaching increasingly on not only their ability to transact, but their ability to invest. So you have to say, if you value freedom, then cryptocurrency can be a part of that freedom. Okay, the negative side is that there's fraud involved in this. It's still the kind of Wild West, like the creation of the dollar in the 1830s when every state had its own dollar and they were fluctuating like mad and so on. It's the same sort of thing. It's at the same degree of maturity. But because people will continue to want to avoid the state and the state control, which cryptocurrency, state-sponsored cryptocurrency will give, then I think you can say that this is a major plus from having a private sector digital currency, because it limits the power of the state. And it provides anonymity to people who will lose that anonymity as the state increasingly moves towards things like central bank digital currency. So are there advantages? Yes. The disadvantages we know. They're volatile. They're immature. They have not achieved the network which they need to be a real rival to fiat currency, but I say yet. And they involve fraudulent and criminal activity. And most of all, because it affects the most people, they can destabilize the financial system and the economy for everyone. So there is a balance sheet. But again, like any other technological innovation, its misuse, like Facebook for hate speech and so on, its misuse is horrific. But that does not say that the tool of itself is horrific. The tool can be good or bad depending on how it is used and how it is applied.
David Roach, thank you very much. Thank you very much for being with us for this episode of the IdeaMe Show. IdeaMe is a global platform. Our mission is to move the human story forward by sharing knowledge of the future. You can find us on all major audio networks at www.radioideame.com, on YouTube and Vimeo. Please subscribe.